With massive layoffs in nearly every sector, weakness in manufacturing, car sales, and housing, and the biggest one-month decline in the trade deficit since the financial crisis, the economic picture is not looking good. Bottom line, now is the time to own gold, which is why the experts at Stansberry Research just stepped forward with a major gold prediction, arguing gold could soar as high as $3,000 by the end of the year, possibly even higher. You can find out why and get instant access to their #1 gold investment today. It's not bullion, an ETF, or a mining stock, but in the past, this gold strategy could have made you nearly 50x your money. Considering how quickly the price of gold has been moving in recent weeks, you don't want to waste any time missing out on the gains these experts believe are in store for this gold stock. To get a copy of his new free report with all the details, simply go to goldmaniareport.com. Again, that's goldmaniareport.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show in person today with my guest. Rudy Franke is the CEO and chairman of Seabridge Gold. It is located in one of Canada's hottest jurisdictions, the Golden Triangle. And it is home to your massive project, massive, when I say massive, it's massive, KSM. And we're going to talk about that today. So welcome back, Rudy. How have you been?
Daniela, always great to see you, and I am privileged and honored to be here.
Well, look, when you said you were coming to New York, I said, you got to come into the studio. And obviously, I want to talk Seabridge. But first, I know that you were at Jim Grant's conference in the city. And there were just, incredible speakers, Jeff Gundlach, David Einhorn. Just curious, any major takeaways about what these major Wall Street insiders are saying about the economy right now?
Yeah, I've been attending the conference for a few years now. I actually presented at Jim's conference 2 years ago. He puts together an unbelievable list of speakers every year. The takeaway I took is the soft landing is not going to happen. We're headed for a major recession in the U.S. And the canary in the coal mine with respect to what's going to happen in the gold market is the U.S. Treasury market. Mm-hmm. We have over $10 trillion of supply coming into the market over the next 12 months, and all the historic buyers are no longer buying. And that's why I think you're starting to see the rates increase on the long end.
And the bond market, right? Yep. Absolutely heating up here. So I love the fact that you are educating yourself. You come out to these conferences, but what do you do as a gold mining CEO with that information? I mean, do you pivot or do anything differently?
No, we, when my colleagues and I started Seabridge in 1999, it was on the basis that we believed the price of gold would go substantially higher. Back then, gold was trading at about $260 an ounce, so far so good. We still believe the gold price is going to go a lot higher, and we write quite a bit about the gold market on our website. So going to a conference like that, there's a lot of takeaway that I get that we're able then to put into our words on our website in terms of why we believe the future for gold remains bright today.
Yeah, well, let's talk a little bit more about that. A lot of exciting stuff happening at Seabridge. You have told me offline that you've never seen as much interest as you're seeing now in the company.
Yeah, so we own 100% of the world's largest undeveloped gold and copper project situated in British Columbia, Canada. We've been talking a number of years that it's our goal to bring a joint venture partner in, and we're now at a point where it's going to happen.
Wow, well, I was going to ask you, beat me to the question, are you still looking for that partner? So
we are running a formal process. We've engaged RBC Capital Markets to run this process. And my expectation that is within 6 months, we will have the announcement of a major partner as a joint venture participant at KSM.
Wow. And over the summer, another big news, you closed a note with Sprott Streaming. Curious to know what you're going to do with that cash.
Yeah, so historically, there were two issues that probably did not allow us to get a deal done. The first issue was, if you look at our historic mine plans, they were a combination of large open pits and underground block caves. Very few companies know how to block cave in our space. So when we acquired our fifth deposit from Pretium in late 2020, we were able to change the mine plan at KSM, where we're now open pit only for 33 years. So the big companies all can execute on that mine plan without worrying about block caving. The second big issue we faced was this is a project that's permitted. We've gone through the environmental assessment process successfully and have our permits in place. However, in British Columbia, within 10 years of granting the permits expire unless you start construction. So the funding we've now completed with Sprott, both last year and this year, it's given us $375 million US to do that early site construction to ensure that the permits don't expire.
And getting back to how you're closing in on a partner, if you could paint the ideal partner, what would that look like for you?
It'll be either a major copper company or gold company. It'll be one that's willing to do the work necessary to get to a construction decision in a reasonable period of time. The first step would be for the partner to come in and complete a bankable feasibility study, and then at that point in time, commit to building the mine. We recognize that any partner that comes in here is going to want control of the project. We're willing to give up control. Our goal in a joint venture is to keep a meaningful interest in the project while minimizing our capital contribution.
You have said in the past that KSM offers a great leverage to the gold price. Explain more what you mean there.
If you look at our most recent mine plan, the all-in cost of production, which includes the upfront capital, the sustaining capital, the closure costs, the reclamation costs, and the operating costs, net of copper and silver credits, it's $600 an ounce. Higher gold prices just create leverage and optionality to the gold price.
So let's talk a little. I want to get your thoughts as a mining CEO about what it's like operating at these levels, because from an outsider standpoint, you're thinking, okay, $1,800, $1,900 gold. I mean, this should be a very healthy environment for miners.
And yet gold stocks are as cheap as they've ever been.
Exactly. So why? Explain this mystery. Rudy.
Well, I think, to be honest, I think a lot of it is self-inflicted. I think if you look at the major gold mining companies historically, they have not been very good allocators of capital. They tend to do their acquisitions at market tops. They then sell projects at market bottoms. Right. They continue to increase their share count without offsetting that dilution with either reserves or production or other measures that would lead to higher share prices.
And don't you feel that sometimes some decisions just feel rushed or hurried, like in terms of, takeovers or takeunders?
Yeah, I think so. I think, you look historically, the deals are done at expensive valuations just to try and create more mass, but at the same time, you're issuing a lot more shares, so the per share metrics get destroyed. One of the guiding principles we have followed at Seabridge from day one is the idea of offsetting equity dilution with ounces in the ground. The idea to grow ounces in the ground per common share outstanding. And we've delivered on that now over the past 24 years. In fact, if you look at Seabridge today, we only have 84 million shares outstanding after 24 years of being in the business. We have 170 million ounces of gold in all resource categories, meaning that each one of our shares is backed by over 2 ounces of gold in the ground. That doesn't even take into account the copper, silver, and the molybdenum we have on top of that.
Well, you are, I'm bringing up John Duty. He's my colleague at Stansberry Research. He runs the top 10 gold list, and you've been on that list for as long as I've been in this business. And that is a very difficult list to make, because his criteria, as you know, is quite tough.
John does not pull punches. He calls it as he sees it, and we're tickled that we are part of his top 10 and have been for some time now.
Just curious to get your thoughts on how closely you monitor what the Fed is doing. And I bring this up because we have two giants on Wall Street, coming out saying, Jamie Dimon came out last week saying that he sees the Fed not stopping anytime soon and that we could expect some sharp interest rate hikes.
I think the market is doing that for the Fed right now. If you look at the long bond, rates are going up while the Fed has stayed pat for the time being. I think the Fed is now in a difficult position. With all these treasuries that are coming to market and bonds that have to get rolled over, the world is no longer buying them. Who's going to supply the capital for these rollovers of the treasuries? We think the Fed will actually have to step in, reverse course, and start QE all over again to be the buyers of these bonds.
I mean, all signs definitely are pointing in that direction. And you remember quantitative easing and what it does to gold. So maybe, would that be an extremely bullish scenario for
Of course it would be. The other issue we have there is if the Fed doesn't come in and buy these bonds and treasuries, rates are going to go a lot higher. This 2% inflation target is ridiculous in the face of rising rates. So, and again, that is also positive for gold going forward. If you look at the 1970s, we had 3 waves of inflation back then. So far, we've only seen wave 1. Wave 2 and 3 are likely coming, and that's when gold has its biggest moves on a historic basis.
I'm just curious because as a mining CEO, I mean, are you just focused obviously on Seabridge, or do you actually also own the physical gold?
Personally, I own some physical gold, but as I have reported many times, 95% of my family's net worth is in Seabridge common shares. So we are all in on this one.
Is there any room for silver?
Of course, silver will go higher as gold goes higher, and probably on a percentage basis, a lot more.
It's not a good week for the metal.
No, it's not a good week for gold either.
Right. Well, Rudy, I wish you continued success, and come visit us soon.
Thanks again
Thanks
for the
for
opportunity.
stopping by here in New York City, and thank you for watching our coverage. We'll have more great content coming your way, so be sure to stay tuned to the Daniela Cambone Show.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.